Ladies and gentlemen, good day and welcome to the Q1FY26 Earnings Conference Call hosted by ZTech India Limited. This conference call may contain forward-looking statements about the company which are based on the beliefs, opinions, and expectations of the company as on date of this call. These statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Sanghamitra Borgohain, Managing Director from ZTech India Limited. Thank you, and over to you, ma'am.
Thank you, Akanksha. Good afternoon, everyone. I extend my warm welcome to all our investors, analysts, stakeholders joining us today for the Q1 Financial Year 26 Earnings Call of ZTech India Limited. I am here with Mr. Dilip Kohli, our Chief Financial Officer, Mr. Sunil Ghorawat, Chief Business Officer, Mr. Ashish, Company Secretary and Compliance Officer, and our Investor Relations Partner from X-Factors PR. Thank you for your continued interest in our progress. We have entered, as we know, the financial year 26 with strong operational momentum and a clear sense of direction. The first quarter has reinforced our strategic priorities in sustainable design, technological differentiation, and on-ground execution. All three verticals, the Habitat, Aqua, and Terra, continue to scale and mature, setting a strong sun for the year ahead. Our focus remains on delivering impactful urban infrastructure while deepening capabilities in specialized construction and environmental solutions. In Habitat segment, our ongoing work on landmark urban park projects has progressed as planned. These public spaces are designed not just as destinations but as an enduring asset for cities, enhancing quality of life and encouraging responsible tourism. Meanwhile, in Aqua vertical, our proprietary GISE technology enables recovery of significant quantity of wastewater in this quarter, reflecting a value of decentralized smart treatment models in urban settings. We also saw healthy traction in our Terra vertical with new projects in soil stabilization, geosynthetic solutions, geocells and RE wall systems for highways and rail corridors. These wins underscore our growing presence in the geotechnical space and our reputation for executing precision infrastructure in topographical complex environments. From a financial standpoint, Q1 has been encouraging with steady revenue growth, margin resilience, and healthy order pipeline. Financially, we delivered a solid performance in Q1. The revenue stood at around rupees 20.48 crore, reflecting continued project momentum. The EBITDA came in at rupees 5.01 crore, supported by our focus on high margin design-led contracts. The profit after tax was rupees 3.04 crore, maintaining our profitability trajectory as we scale. So we remain optimistic about our opportunities ahead and confident in our ability to deliver long-term value. Before I hand over to Mr. Sunil Ghorawat for further insight, I would like to thank you all our clients, partners and shareholders for your ongoing trust and support. So I would request Mr. Sunil Ghorawat to take over from here. Sunil ji.
Thank you, Sanghamitra, and good afternoon, everyone. It's a pleasure to connect with you all again. This has been an incredible, fifth call which we have been having together, where probably we have discussed quite a lot about in terms of how the business is shaping up. And as we begin the new financial year, we have also embarked on a significant, growth plan for our several business divisions. For some of you, as you might have joined for the first time. ZTech operates in three distinctive business segments. The first one is called Sustainable Creative Park business. The second one is around the geotech business, and a third is on industrial wastewater treatment business. We started our year with good beginning in terms of strong order booking and our ability to probably execute these projects. In spite of, we seeing heavy rains for last several months across India, which is a good thing. But from a point of view of in terms of our on-ground work, it does bring in a little bit of challenges in terms of the ground level execution. But we have learned now to probably how to overcome those and probably keep delivering more and more projects on time. It is also our pleasure to also share that ZTech has created a distinct brand identity for the park business. Henceforth, the park business division is called Zing Park. Zing is Z-I-N-G, and Zing means joy, happiness. As I have described in earlier calls that, our vision is that joy is for everyone. And in order to keep pushing that vision, we felt that having a brand identity for the park is, going to be very helpful as we build, one of the unique park operator company, not only in India, but probably in the world, Going forward, and also of our existing parks, we are rebranding them as a Zing Park, under ZTech. And future parks will also continue to probably have the Zing Park as an identity as we go forward. In our previous calls, I had also mentioned about how, Zing Parks have evolved into a category which is beyond just waste to art theme parks. We have become at a larger scale, a creative park development company. Waste to art remains one of our key focus areas. And apart from that, we are, making urban forest parks. We are making children parks. We are developing concept around wellness park. A whole new dimension is being offered now to the Indian consumers at large. If you look into the, past situations, either we had community or public parks, or we had amusement parks or water parks. There was a whole category which was missing in between these two spectrums. And that is something which we are now, working on creating that interesting offering, not only meant for India, probably for a larger parts of the world, In our, habitat work vertical, both ongoing projects are continuing as per the schedule, with, full kind of a absolute mindset on the timely execution. And these are becoming landmark at many levels. Currently, we have a couple of our verticals which are ready to be opened up. We are just waiting for a proper opening by the chief ministers of the state to open these parks. Subsequently, we have, post-June, we have also a couple of other parks which are getting ready for opening, We have planned the opening of such park in a way that we are beyond the monsoon part of the year so that, we are able to target gatherings, crowd at these parks, In terms of the water vertical, we have been relocating our business from Goa to Vadodara to be close to the customers. We are executing the various projects which we have in time, which we have, in hand. And the idea is to probably, start developing that business more aggressively once we have set up our new lab and everything else at Vadodara, so that we are able to offer treatment of more such inorganic compounds which needs to be taken out from the wastewater stream. Our geosynthetics business continues to do well. We have had several wins over last few months of this year. And we believe that, with the execution skill set which have been there in place, we will be able to have a significant growth in that vertical this year. While, as we see the Q1 performance, reflects very balanced revenue contribution across our verticals, with margins which are probably getting better quarter to quarter. We have created a significant savings in terms of the cost going forward because of number of parks which we are going to build for the rest of the year. And the order inflow quantity has been very, very healthy. Our focus during the first 2 quarters have always been in terms of how well can we execute so that more and more people post monsoon can visit our parks and probably increase the significant footfall. And we remain committed in terms of doing that. As we speak, we have construction activities going on around 13 different parks, around 27 different project sites for the geotech. But geotech, as I have mentioned earlier, project cycle is 12 to 18 months, where most of our parks get delivered within less than 6 months. As Sanghamitra mentioned earlier, that we mobilized a lot of projects and we were able to grow our revenue also compared to the last quarter of the same Q1 of the last financial year. And we have been able to increase not only in terms of the revenue, but in terms of our overall profitability also has increased significantly. Our profit after tax has also increased, with a significant percentage points. And we expect, the momentum to grow further as we move forward to the, last 6 months of the year, which probably are the most critical for our business. To sum up in terms of our Q1 performance, we have laid a very strong foundation for the year ahead. Our financial and operating metrics remained aligned with our long-term vision. We stand committed to our projections for the full financial year, and we are very confident that we will be able to maintain that momentum across our verticals and continue to grow both organically and inorganically as we go along. And having said that, I am ready to take any questions which you might have. Hello?
Hello, sir. Can we start
Yes.
with Q&A?
Yes, please. Because that's what probably makes it interesting, and that takes a lot of time as well.
All right, sir. I'll start with the Q&A. Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We take the first question from the line of Jay Chauhan from Trinetra Asset Managers. Please proceed.
Hello, am I audible?
Yes, you are.
Yes, sir. Good afternoon, and thank you for the opportunity. So, sir, my first question is towards the Habitat, the Zinc Park site, where, in past con calls you have mentioned there are various business models, right? Like asset light and maintenance model where you get price for non-ticketing revenue, like F&B, fixed fee model, like you're using in Pimpri Chinchwad, and the full investment model, like your flagship in Noida. So, my question is around, like, as you look forward to rapidly scale Zinc Park footprint, what will be your preferred model mix for the future? Which of these models do you find most attractive from a return on capital perspective, and how do you see this portfolio going ahead, maybe over the next 2-3 years?
Yeah, very good question. We have now gone through a learning curve of 15 months in terms of not only building these parks but also running these parks. In terms of the way we see the model which works best is where the majority investment is done by the government. We take care of the operating expenses, and either we share the revenue with the government or we share a fixed rental with the government. We have now done both the models. There are certain states which are preferring that we do a revenue share. There are certain states which says that, no, we don't need the revenue share because it becomes complicated long-term period. You give us a fixed rental. And honestly, if I look from a company's point of view, I think a fixed rental model works better because, there is a less coordination which requires with the government. We need to basically pay a monthly rental while they have shared the majority of the capex and able to offer a good experience to the customers at large. Our headaches are much lesser in that. So in terms of the preference wise, let me list it down. Our best preferred model is government puts majority of the investment. We take care of the operating expenses and we pay a fixed rental. The second preferred model is government puts the majority capex. We pay for the operating expenses and we pay a revenue share model with the government, whatever that can be. In some cases it's like 50-50, some cases it's 40-60, things like that. The investment model, we want to use it very selective because one thing which we are very clear is that we want to remain overall asset light as a company. We are only going to invest our money for two reasons. One, either we are getting a location which is so good and it is in a very large urban agglomeration that we are 100% sure in terms of the footfall which we are able to generate on a continuous basis. That's number one criteria. Number two criteria is any city which helps us leapfrog our other business objectives of creating more parks. And if we need to create a demo version of any park which will help us expand the category, we don't mind putting our business. Rest other, business models are primarily meant for where the government is putting the majority investment and our investment remains not more than, 10 to 25%.
Got it, sir. Understood. And as I can see, sir, you have around 126 crore of order book for Creative Park for Habitat. So This is just for EPC, or how does it work? If we take an example of the model which is the most preferred one, the majority capex done by government, and you get a fixed rental for the same. So for this, the order book that we see, yeah, sir.
Yeah, those are only two parks as of now. Where we have that model, we have few more lined up. So this is the trend which I see that happening in Maharashtra. So I want to, build upon it, and then I want to take that concept into other states. So for example, recently we have got a project in Bihar, Chief Minister laid the foundation stone few days back. There again the thing is that they are putting almost all the capex and we are not paying them any rental. We are not paying them any rental, nor we are doing the revenue share. We are saying that we are only going to take care of the operation and maintenance expenses and provide a very good experience to the consumer. So that's another model which has opened up, a place which we are not sure yet that how it will evolve, By the way, I forgot to mention, one other model which we have developed, and we have already got the first order in that model, is where the government not only allowed us to build the park, but has also allowed us to build staying facility in terms of putting luxury tents and also allowing us to do the banquet functions, So today, the park in Orissa will become a three-pronged revenue stream for us. One at the park level, the second is a kind of a hotel level, and the third is at the banquet level. Now we are trying to also push that model in certain locations to see that, we build enough, reference points to show to the government that why this model is effective in certain places. So as of now, to answer your question, most of the orders which we have are in the revenue sharing model with the government.
Right, sir, right. But my question was actually what I see in the order book of 126 crore. This is just the EPC contract, right? The capex that will be done by the government and by you, and the fees that you take, and then the recurring revenues come later, right?
Right. Absolutely.
Yeah, so that was my question. And the segment-wise revenue breakup that you gave, which was around 76% for specialized park development, that consists of the recurring revenue that you get, right?
Yes, it includes both the EPC and the recurring revenue.
What percentage is the recurring revenue, and what percentage is
recurring
EPC?
revenue right now is around 30%, 25-30%. Most of them is otherwise a fixed revenue, because that is getting built as we speak, right? Currently, we have the revenue streams are on only for 4 parks. There are 3 parks which are going to start any time in the near future, where we will also have the recurring revenue.
Got it, sir. Got it. Understood.
I expect that numbers to change by next year. It should be more like around 2/3, 1/3. Year after that, probably reach to 50-50, and then going forward, third year it should be 60% would be recurring, 40% would be EPC, because still we have a long mile to go. We still see a lot of opportunities around there.
Right, sir. Understood. And these contracts are long term, right? What are the exact
20 years.
timelines?
Most of them are for 20 years. We have one contract which we purposely have taken for 5+5.
Okay, sir. Understood. Okay, sir. That's it from my side. Thank you.
Thank you.
Thank you. We take the next question from the line of Pranav Shrimal from PINLC Wealth Advisory. Please proceed.
So I hope I'm audible.
Yes, you are.
Yes. So I wanted to ask about the timeline with regard to the parks. How many parks do we currently have that we are working on? How many do we have in the order book, and how many will be completed by this year?
So we have so far built around 17 parks. Out of that, we operate only 4 parks. The initial ones and the smaller ones are all on the EPC model. As we speak, we have around 11 parks which are at various stages of construction. So once, let's say, they get completed, within this year, which is December, that makes it 15. So I expect we will have at least an bouquet of 20 to 25 operating parks under our belt by end of this financial year.
20 to 25 parks. And most of them are revenue sharing, or they are just EPC projects?
No. They are hardly out of that. We will have 2 or 3 of them might be EPC. All of them are revenue sharing. And that is why I was saying that probably next year onwards, the revenue share part will increase significantly when we have more number of parks which are coming on stream on a revenue sharing model.
Understood. So what sort of revenue can we expect, let's say in Q4, after all the parks have been completed?
It is, very difficult to give you a breakup peak, but as I have mentioned in the past, that if I do an X number, of revenue this year, I expect around 70% of that will be coming from the park business, and let's say 30% comes from our other 2 verticals. Out of this 70% revenue which we get from the park vertical, around out of that 70, when I look at the whole year kind of a thing, 20 to 25% of that revenue, 20% probably, because it depends when does the park start. Now, for example, I have one park which is ready to be opened for last almost a month. but it is not opened yet because we are waiting for a CM's time to inaugurate that, and I have not been pushing it also because it's raining quite a bit here. So no point probably opening it, increase your expenses, and probably because of the rains, footfalls are low. So if I look at this year, out of our park revenue, 20% should be around coming from the, recurring business.
Got it. 20% from recurring business. And so secondly, on the water division, you said that we are shifting our business to Baroda, correct?
Yeah.
So is there any timeline that we expect that the labs will open up and we can start expecting some revenue to start going?
By September, we should be, functional with the lab in Vadodara. And the next 6 months will be a year in the time when we will start booking some more orders because it was becoming very difficult to hire team in Goa and also operate from there while most of your customers are in Gujarat.
Understood. So the Baroda lab, this will also help us in sort of increasing the margins in the water division? Shifting the lab.
It will not only increase the margin, it also brings us closer to the customers. There are many things which our technology can do. Right now, we were struggling because of the manpower issues, availability for such a niche business in Goa. Historically, this business, when we acquired, was based out of Goa. So we couldn't do anything much. Now then we realize that if we need to take it to the next level, we need to be a place where we can easily get talent. And we are also close to the customer. So we have made all those decisions and probably soon we should expect some results to start coming in.
Understood. That's it from my side, sir. Thank you so much and best of luck.
Thank you.
Thank you. Before we proceed with the next question, a reminder to the participants, in order to ask a question, you may press star and 1 on your touchtone telephone. The next question is from the line of Darshil Zaveri from Crown Capital. Please proceed.
Hello. Good afternoon, sir. Thank you so much for taking my question. Firstly, congratulations on a great set of results, sir. So just wanted to know, sir, that for FY26 that we stated previously that we are targeting around 150-160 crores of revenue and 35-40 crores of PAT. Are we in line of achieving those targets, sir?
We are very, very confident about achieving those numbers. I won't be surprised if we surpass those numbers handsomely.
Oh, okay. That's great to know, sir. So I just want to know then in terms of seasonality, like how do we look at it, sir? Because Q2, Q3 would be major, or how would it flow through? Because I think in the first quarter it's not flowing a lot of revenue, so that's why.
No, because you need to appreciate that we are in the business of developing outdoor parks. By nature of that, when we are outdoor, we do have some impact of seasonality to start with. Now, having said that, this year has been a little more challenging because the rains have been, reasonably, good in some way. It's good for the country at large, but it is, in a way, affects a little bit of our revenue stream as of now. Because the rains in most of the part where we operate in, it has been heavy. But what is going to change as we evolve over the next 6-12 months, that now our parks are getting opened up in other parts of the country as well. The first park which will open up, beyond northern India would be Pune, Pimpri-Chinchwad area. The other park which is going to open up is in Ahmedabad area. The third park which will open up is in Patna. Similarly, we are opening some park, some other work in Telangana is the other area where we are looking at, Hyderabad. So now, once the distribution of parks happens across India, then some of that seasonality impact also gets taken care of. Challenge has been that as of now, the parks which we have opened and we are managing are all located in one geography. And as it changes, I don't see that as a much of a problem. Moreover, if you look at many industries in India, you'll usually find that the last 6 months of the years are, much, much better. Both in terms of the consumption patterns, in terms of the weather situation, people are more out, more spending happens, festive season, the new year and everything else which falls, during the last 6 months of the year. And this is a situation not only restricted to India. We have been exploring Dubai market, and we have had several rounds of meetings with the people who have operated parks there or are operating parks. There are also many parks which operates only, they actually shut down for 4 months of the year. They operate only 8 months of the year, 6 months of the year. But the revenue which they generate in those 8 months, 6 months is significantly higher in terms of offsetting any kind of a distribution of, the footfall which happens during the whole year. So even if I look at our, footfall vis-a-vis last year to this year, we have grown in terms of almost 25%.
Correct, sir. Fair enough, sir. And I just wanted to know, like now, the 126 crore order book for our specialized parks that we have right now, those all will get executed by the end of the year, right? If we go around by the 6 to 8 months target that we have for constructing. So how's the...
Yeah.
Sorry?
Yeah, go
Sorry,
ahead.
Yeah, so just one, if they are all going to get constructed by the end of the year, so how is the order bid pipeline, looking like, sir? Like, how do we, go ahead? Like, what is the scenario of that? Because I think in a way we are the first, creators of this kind of segment. So there is not, I think we are going and creating this in every state, right? So how do we just see the conversation happening, and like what is the longer term, like maybe next year or after that, what is our target, sir?
Sure. So the way I will, the way I look at it, out of these 126 crores, I expect almost 85 crores worth of orders which will get executed, I am assuming by end of this year itself, by end of December. And I expect that we will be able to win several orders which are already at the tender stage, which we will get it in next 2-3 months time, and they will also get executed by end of March, So as far as our overall timelines and the numbers are concerned for the FY26, we are pretty much, on track, and I don't see any, deviation there. The second point about your pipeline, our pipeline is very, very strong right now. So we have almost more than 30-35 parks which are under various stages of, finalization to come up to the tender level. And these are not which have come at the tender level, but, we have identified the concept. DPRs have been developed, which means the government authorities have been convinced, they have been sold, they have bought the idea, they have arranged the funds. Now the tendering process is on. So when I look at all the pipeline of 30 plus, various inquiries, I am more than certain that at least 20 more will get converted into confirmed order before this financial year ends.
Oh, okay. That's great to know, sir. And so just like last question from my end. So as like more recurring ticketing revenue starts flowing through us, so how will the margins behave? Because I think we have substantially better margins than like everywhere else. So just wanted to know how do we see envisage the margins moving, because ticketing margin should ideally will maybe flow directly through the PAT because all the costs would have been already been incurred, or how would it, just go ahead, sir, if you could, help me out with that. How do we envisage the future margin, sir?
See, future margin, as we are able to master the art of operating these parks more and more effectively, will definitely increase substantially. So to give you an example, last March, we opened the UP Darshan Park. We ran it for 1 year. We learned that was our first park which we were operating. We learned what needs to change there in terms of F&B. Now, today, we are bringing those change in terms of the F&B experience. Now, with that change itself, it should give us almost 1 crore rupees of net impact on our bottom line just out of one park. Now, that learning has been made. It took us almost a year to probably figure out that what is that consumers are looking in terms of the F&B experience and what needs to be done in these parks. Similarly, we realize that events are an important part of what needs to be done in these parks. And we organized, summer carnival in one park. As we speak, a monsoon carnival is going in another park. We saw that there is a significant uptick in terms of footfalls whenever such events happens, Third thing which we realized that the kids' adventure activities are, very, very popular and brings in lot of student crowd, to the parks. We have signed an agreement with a company which specializes in two things. One, they create those experiences, rock climbing, zip cycling and many other, activities like that. And we have signed them for 2 parks to start with, where they commit that they will be able to bring in almost more than 100,000 students in a year. Now, these kind of things are probably making us do more of these things in future parks which we are opening, So while we continue to see that this will probably get better day by day, but we are also learning at the same time and probably making those improvisation in the park design going forward. We opened the, sports arena, the fast forward sports arena in Lucknow. We learned from that what are the consumers looking at, what kind of games which are of interest to them. Now the second one which we are building up, we have tried to now, do what probably sells most and take out what probably is not that where people don't have much interest, and it also requires more capital investment. So I think with all these processes in place, the recurring part of the revenue will start seeing significant uptick, starting next year, And that's where I said that probably that contribution will move up to almost, 30-40% next year onwards, which currently might be around 20 odd percent,
Oh, okay. That helps me a lot, sir. Thank you so much. All the best.
Thank you.
Thank you. We take the next question from the line of Man from Vivek Jain Family Office. Please proceed.
Hi, Sunilji. Congrats.
Hello, how are you?
All good, Sunilji. Sunilji, so before I start, I just wanted to, I just had 3 questions. So first is that I wanted to understand that the order flow has been significantly slow. The way that we actually want to achieve those numbers of 20-25 parks by the end of this year. Do we have significant order?
Hello? Sorry, again, you are breaking. Asher, you are breaking.
Oh, okay. Sunil ji, abhi awaaz aa raha hai?
Abhi aa raha hai.
Yes. So I just wanted to understand this, कि हम लोग का order flow has been significantly slow in regards to what we want to achieve. So I would like to understand that how the order pipeline is going to flow, like from where are we going to get the orders, and there have been certain orders for which we have been declared L1 but हम लोग को वो मिला नहीं है, ऐसा कुछ है तो मतलब that also would generally help us. तो कुछ आप ऐसा बता सकते हैं?
Yeah, but first of all, I don't think and I don't agree that our order inflow has been slow. We have, got many orders in last, couple of months. You will be starting to hear more about them. We just announced an order, today only, which we have, got from Bihar, and there are several more orders which we have received, and you will hear more about them. So I don't think it is slow at all. In fact, if I look at overall in terms of the number of orders and the number of orders where tender process is on, we are way ahead of what our expectation was at the beginning of the year. So the second point of yours, probably yes, we do face some of those issues, not of our creation, but at times with the government side that, for example, Ahmedabad, we have already been awarded, a job, we have given the EMDs and everything else. We have also been declared L1, but they are having some issue in terms of the handover of the land. Now, they are, the commissioner remains committed that karna to hai, मैं ये एरिया ही खाली करवाता हूँ, नहीं तो otherwise I will give you an alternate piece of land. Now, these are part and parcel of the game. Something which we can't control, but I feel in our overall scheme of things, we have enough backups which are available that अगर एक दो में ऐसा delay भी होता है तो हमारा overall impact कुछ भी नहीं होता है.
Got it, sir. Got it. And second question, I'll come to that is that हम लोग का the EBITDA margins or the margins in the park business has gone down significantly, and considering that EPC execution was a bit low and contribution of the same will be on account of O&M revenue. So why it is that the margins have dipped a bit considering the same as of that of say last quarter?
It has dipped marginally, and it probably looks like the margins have dipped because when you look at the EBITDA level and all that, probably three things are happening, Ashar. One, we are ramping up the operating part of the team significantly. If you see the number of headcounts, it has increased significantly. We have added team for the revenue management. We have added team for the events. We have increased our marketing team. So obviously those expenses are probably have come into the books as of now, but inka real impact will start seeing probably as we move forward, And so in terms of our gross margin on the projects, I don't think the margins have gone down. Yes, the operating margins have, operating costs have gone up because this is by design. That unless until we invest in terms of the building up these teams and all, we will not be able to achieve our desired objectives. So overall, I expect that when you see the next 6 months of the year, which is the peak year for us, it will more than offset everything.
Got it. So we should see the margins going back to where the quarter 4 margins were.
Absolutely. अब आप सोचो ना, मैंने अगर 15-20 आदमी रख लिए for my park operations and fine tuning the operations part and all, and आज के दिन में वो मेरे खर्चे तो शुरू हो गए. At the same time, this is the not the peak season of the year, this is the slowest season of the year. तो आज के दिन में वो एक बार के लिए तो affect करेगा, but that I am ready for the peak season.
Got it. No, makes sense. Yeah, that's it. Thank you so much.
Thank you.
Thank you.
Thank you. We take the next question from the line of Pratham from Orbit Fund Management. Please proceed.
Hello, sir. Am I audible?
Yes, you are.
Hello. So my first question is, last time quarter 1 was 17.5% of our entire financial year revenue, but this time 20 CR. If I extrapolate based on our target of 150 to 170 CR, would be 12 to 13% of the entire financial year. So, sir, do you think we were a little weak on execution this time?
No, not at all. I think you will see going forward. First of all, this year has been little more crazy in terms of the rains, and as we all know about it, most part of the country has had significant rains, and as you see that all our businesses, have outdoor issues, whether I look at whether it's a geotech, whether it's a park, whether it's even the, recovery business, wastewater recovery business, all of them have an element of outdoor construction, outdoor involvements are there. So while, it might be lower, but at the same time, knowing what are the external circumstances, I feel we have done, reasonably okay. We have significant orders in hand, which we are trying to push as much as we can. But at the same time, we need to be wiser, because what happens is when you are, let's say, doing the construction, I dig a hole and it rains and probably the water is filled, and it takes out my 3 days of time to probably, get the site to be normal. I do it again and then again it rains, So I would not probably, extrapolate it like that.
Okay, fair enough, sir. So my next question is, so can you help me understand how many park EPC projects are currently ongoing, and what amount of billing or what value of billing those will generate?
No, so the parks which only have the EPC, you are saying?
Yes, sir. So the ongoing projects, the park EPC projects, and what revenue will they generate?
No, so we have two kinds of parks. One is which is purely on an EPC basis, and the other one is where we are not only doing EPC, but we are also operating. Which one are you referring to?
So currently both, except the operating O&M part, the EPC projects which are ongoing, and like what revenue will they generate?
So, almost in the current, what we have, we are reasonably sure about 80 odd crores revenue, which will generate, because 30-40 crores which are the, maintenance kind of a revenue, which are for a longer period of time. So I'm not taking them in account.
Okay. Okay, got it, sir. So my last question is, last quarter we had guided for around 100 CR order book we'll get in like next 3-4 months. So do you expect to win those 100 crore order in the next 1 month?
We are reasonably sure. We almost, there you will probably hear more and more about it as we go forward.
Okay. Thank you so much, sir. That was my question.
Thank you. Before we proceed with the next question, a reminder to the participants, in order to ask a question, you may press star and 1 on your touchtone telephone. The next question is from the line of Dhairya Trivedi from DJ Investments. Please proceed.
Hi, Sunilji. Congratulations on a good set of numbers, and thanks for taking my question. So my first question is that we're looking to open roughly 25 parks, you said, by the end of the year.
20 to 25 parks.
Got it. So the full impact of these parks will come in FY27, right?
Right. Absolutely.
Right. So I mean, while I understand that it's difficult to kind of generalize, but what's the total, kind of revenue that we can expect from these 24 operational parks by the end of next year, given that they'll be operational in different states of different sizes and all of that?
I think safely, and I'm talking again, going to be very conservative. Each park you can take an operating revenue of around 2 crore rupees or so. So you can look at, these 24 parks probably should give you at least 48 crore rupees of revenue.
Okay, this is the EPC part of the business?
No. I'm talking about non-EPC, operating part of the business.
Okay. And how much EPC revenue can we add to this?
So, these parks anyway will get constructed during this year, right?
Right.
So the new parks will happen. So our journey has just begun. When I probably look at, we did recently a study on in terms of how big, our addressable market, the TAM for waste to art parks. We feel a country like India needs around 450 waste to art parks. Even if I probably do whatever I probably will do this year, as a country we are talking about, we would have done probably 35 parks. So I think the game is a pretty long haul, and we feel that, we should be able to easily achieve both our EPC numbers and operating numbers as long as we continue to execute well.
Right. So the incremental revenue you are saying will be roughly around 2 crores per park, right?
Yes, I'm talking purely the operating revenue, because as you rightly said that all these parks will get constructed during this year and a different months of the year. So I really do not know what probably will be the impact, but I expect that once they are completed, in a year they should give revenue of around 2 crore rupees,
Right. Understood. And also you mentioned, in response to one of the earlier participants, that you're tying up with certain vendors for a lot of these adventure activities. So
Yeah.
how do the commercials, work out in that kind of an arrangement? Like, do we pay them a fixed fee or?
It's a fixed plus revenue share. Everywhere we try to do that, fixed plus revenue share, or we take an MG, minimum guarantee.
Okay, but the fees will be paid by us to them, right? So then that's a revenue share in that arrangement.
No.
as well?
We don't pay. They pay us because we are giving them a platform to offer their services.
Okay. And how do, what do they charge in that sense then?
So, for example, this company, they charges schools around 500 rupees per student. Now, 500 rupees per student, they will, pay us, let's say, around 50 rupees. 50 rupees will go towards the ticket. Then they will charge, couple of hundreds goes towards their F&B for students. And then their other expenses, and also they have a huge sales marketing team for schools. So that's how these models work.
Right. Okay, understood. And so just one last question. What is the current cash that we are carrying on our balance sheet at the end of Q1?
We have, I think, over around 70 odd crore rupees. 65, 70
Okay.
crore rupees.
So that's good enough, to manage the opening of various parks.
It's more than enough for our operating, cash flows, also good enough for we are looking at some acquisition opportunities also. And moreover, over a period of next 12 months, money will also come from people who have subscribed to preferential warrants. So we are well capitalized.
Right. Okay. Great, sir. Thank you and all the best.
Sure. Thank you.
Thank you. We take the next question from the line of Bharat Reddy from AB Capital. Please proceed.
Thanks for the opportunity. In our last call, I think we were talking about demerging of water and geotechnical business, right? So any plans on that in the near term?
Yeah, it might happen, if everything goes well, but before September. At least the plans would be in place. Whatever time it takes, subsequently we will know. But let's keep our fingers crossed, something good will happen.
Okay, so the plan is to demerge and list it separately? Is that the plan?
No, so the plan would be, yes, the plan would be is to create two separate, verticals. One would be zinc parks and the other will be called ZTech.
Okay, so the ZTech part contains water and geotechnical segment?
Yes.
Okay. Yeah, my next question.
So I think we have made the beginning by creation of zinc parks,
Okay. Got it. Can you give more details about Hyderabad project?
About Hyderabad project?
Yeah.
So, we were invited, we have shortlisted, multiple locations there. We have shared the ideas with them. They like the idea. They are probably giving us some of their suggestions. Once they give the suggestion, then the tender process will start.
Okay, so it is not just for one park, but for multiple parks in the city.
It always starts with one park, and we also want to start with one park so that we also learn about the city. But our experience has been once we have created one park, we have gone to multiple parks in those cities. So if I look at, Delhi, we have done almost 5-6 parks here. Lucknow, we have done 3 parks. Patna, we just did the foundation stone by the CM last week. They immediately called us that why don't you do this second one also? We are doing couple of them in Ahmedabad, Gandhinagar area. We are looking at Nasik, multiple parks. So it always starts with, one, and then it leapfrogs from there,
Okay. Any tentative timeline that we can expect for completion of one park?
In Hyderabad?
Yes.
Difficult to say, sometimes, till once the tender is floated, then I can give you a more definitive timeline. Till the tender is floated, very difficult to give timeline, and moreover, we will be working for the first time with them. In some places we have seen, we have the idea the tender is out in 2-3 weeks, and 6, weeks, the entire tendering process is over. In some places we have seen it takes 6 months, So very difficult for us to, say it with conviction yet, when will it be ready to operate.
Okay. One last question. So I know that you're guiding for 70% top line growth and much more bottom line growth. Any guidance that you would like to give for FY27?
What would we like to do it for FY27?
Yes.
What do you want me to do? Sorry, I missed your part. Question.
Sorry. Okay. So you were guiding for 70% top line growth and better bottom line growth for FY26,
For 25,
right? So I'm just asking you. Yeah. So I'm just asking you, any guidance for FY27, if that is feasible to give?
FY27 can be very game changing, because of couple of acquisitions which we are probably looking at. But let's say if the acquisitions don't happen, I expect at least minimum similar level of growth even in FY27 with the kind of a pipeline which we have already built. And as I also mentioned that today, as a country, we need around 450 parks.
Sorry to interrupt, sir. The participant is out of the queue.
Okay.
Yeah. We'll proceed with the next question. Before that, ladies and gentlemen, due to time constraints, please limit your questions to 2 per participant. The next question is from the line of Keshav from BHH Securities Private Limited. Please proceed.
Thank you so much for giving me the opportunity to ask my questions. Firstly, I would want to congratulate you for a set of excellent numbers. So as we rightly know, this is a seasonal business. Right now it is seasonal because of the rains which have come. So we cannot strictly compare the numbers with March. So there are no rains in March. There are rains April, May, June. This is what you reported. And there are unseasonal rains which have happened. So I see the numbers are excellent, sir. Like you've grown your
Thank you so much.
So 20% growth hai, sir, even for the worst quarter of your business. So you've guided 70% CAGR growth, right, for this year versus last year for the full year?
Yes.
So that's quite ambitious. I would, just want to say that I just want you to give me some idea on receivables. What are your receivables? Why the receivables are on the higher side? Is it because it's a government business, or can you give us some your thoughts on that?
See, receivable businesses are slightly high. As you rightly said, you answered that question because a large part of our dealing right now is with the government. Because almost 70%, 75% business is coming from the government side. The good thing, what I have seen with the government is there is delay, but the money is always safe. Moreover, even if it takes a little bit of time, my margins are protected, my payments are secured. It's just the paperwork. So though from our side, we keep pushing it, but the paperwork is something which I don't necessarily control. I haven't seen any kind of a decline in terms of our receivable days, but a typical generally average of 60, 90 days cycle is continuing,
Got it. Thank you so much. It's again a big congratulations. The numbers are great. I don't know why the stock hit lower circuit today. The guys who bought it are very, very smart. And I think I wish you all the best. Means this is amazing guidance what you've given us for the full year. Thank you so much again for an excellent set of numbers.
Thank you.
Thank you. We take the next question from the line of Maitri from Sapphire Capital. Please proceed.
Sorry. Yeah, hello. Am I audible?
Yes, ma'am.
Yeah, just participant asked about the growth guidance for FY27. Could you reiterate it again?
Look, see, I can't say exactly what will happen, but, what I see currently our order pipeline, and I see with the current order pipeline we have in hand and with the amount of interest which we have going around, I see significant, growth to continue not only FY27, but at least for next 3-4 years at least. And as I also mentioned earlier that today we have around 35 odd creative parks will happen in the country by end of, or 35 odd these such parks will happen by end of this financial year. And if I look at our total urban population vis-a-vis how many of these parks are justified is probably around more than 450. And seeing that we are the leader, undisputed leader in this category, you can yourself assume what kind of a growth can happen, as long as we continue to execute well.
So minimum of 70% growth that we are targeting for FY26, can we do the same in FY27 and 28 as well?
Our endeavor is always to probably do more. Why would I restrict ourselves there? Probably we are continuously developing as an organization. More team is being developed, and I expect that we should do always better than what we have done in the previous years.
That is great. Secondly, we are planning to shift to Vadodara for our wastewater treatment. So currently, yeah.
Due to time constraints, can you please
just one last question? Is that okay? Just one question.
Yeah, quickly go ahead, ma'am. Yeah, so we're shifting to Vadodara. What's your question?
Yeah, so your wastewater contribution, how do we expect it to improve from maybe 27 or 28? And what part of it will be must-see?
I see that, from next financial year, this business should at least be, at an organic level. If we don't acquire any other company, it should be in the range of around 10 to 15% of our revenue. Because it's a very super specialized business, and probably we only want to target certain kind of a clients and certain kind of projects.
And we'll see a significant margin improvement from that happening. Is that correct?
Yes. Currently we are trying to build a lot of references, so we have been working at a little lower margin than what I would like to have. But I see that improvement happening going forward.
Yeah, that is it from my side. Thank you so much and all the best.
Thank you.
Thank you. Before we proceed with the next question, participants, please limit your questions to one per participant. The next question is from the line of Deepak Pandey from Shagun Capital. Please proceed.
Hi, just two questions. First would be on the major expenses side for recurring revenue and also in the EPC portion. What are the major costs? And secondly, how many such tenders are being floated each year? And what could be this number for next 2-3 years? If you can help me with this.
You said how many, what are the major expenses?
Yes.
So, the major expenses, number one major expense is the art development. Number two, the major expense would be electrical, and similarly would be more of a civil part of the business. So these are the three major components, artwork, electrical, and civil utilities kind of things, And how many tenders are currently floated, you asked?
What is the current number, and what sort of tenders do we expect in the next 2-3 years? Some visibility there.
Next 2-3 years is very difficult to say. I'll reiterate that such parks are required in almost every, tier 1, tier 2, and now we have even gone to the tier 3 cities also. So if I look at minimally, there are around 150 such cities in India where such parks can come up. Now, in some larger cities, there are more than one park which probably is there, and smaller one, only one park is there, and it becomes a go-to destination. So going forward, I see more and more trend happening. Recently the Swachh Bharat Awards were given by the President of India. The Ministry of Housing and Urban Affairs called us, and we made a sarangi for the President of India made out of waste material, which was given to them. They made a video on how the sarangi got made out of waste material. Everyone in the Swachh Bharat in Vigyan Bhavan at Delhi, every worthwhile commissioners from the country were there. They have all now know about the concept of waste to wonder, waste to art. So everyone probably is trying to align their resources. So I only see, a continuous growth happening from the customer side. Now, having done that, now the next thing is the growth in terms of the operating side, which is our challenge and which is what we are continuously working on. So very hard to give a specific number of tenders. So if 150 cities itself probably want to have only one park, over a period of next 3 years, there should be 150 tenders.
Understood, sir. And the second question is on the receivable side. So can you provide the number?
We would have to take this as only one question. Would you like to go back to the queue?
Yeah, no worries. Thank you.
Thank you. Ladies and gentlemen, due to time constraints, we take that as the last question and would like to hand the conference over to Ms. Sangha Mitra, Managing Director from ZTech India, for closing comments. Over to you, ma'am.
Yeah, hi. I would like to again extend my heartiest, thanks to all of you. I hope all of your queries have been answered and then it's clear to all of you. Thank you once again and have a great day. Thank you so much for being with us. Thank you.
Thank you, everyone.
Thank you. On behalf of ZTech India Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your line.